Hi, I'm Quinn Nguyen at Intercom's the Oil and Gas Conference in Denver, Colorado. Joining me now is Neal Dingmann, Managing Director at SunTrust. Hi, Neal.
Hi.
Now, what differences are you seeing in the recent pullback compared to 2008 from an investor's perspective?
Sure, there's been a lot of talk with investors here at the conference, and what you saw is you hear a lot of, we don't want what happened to us in '08 versus, again, happened this time. And what a lot of them are referring to, especially when you talk about, to me, two things. First, from a liquidity standpoint, people now are more concerned that whether it's a small cap, large cap, it has to be a very liquid company. They have to be able to get in and out of several 100,000 shares a day. So liquidity has become a much bigger concern for some investors today than it was before. And then I think number two, I think the big difference from investors, they seem to be looking for newer plays. In '08, it was more, let's find the core locations and build on that. Today, whether it's Utica, Alberta Bakken, a lot of companies have talked about that here, different Marcellus areas, people are looking for newer plays than they were, I think, in '08.
What about as far as companies are concerned?
I think companies, I don't want to say learn their lesson, but I think learn their lesson soon after '08. And so from a company perspective, and I think investors are only partially sort of recognizing this, and that is from a company perspective, they want to have much better balance sheets today, whether that means they're doing preferred instead of straight debt. And so when I look at the companies, and I think most of the E&P companies here have done a good job at that, they're much less levered than they were in '08. They've got a lot more cash sitting on their sort of war chest, as I call it, so that if we do have a downturn, even call it a sustained downturn, 6 months, a year, 18 months, they can withstand it much better than what we had in '08, where a lot of them actually cut it real close to surviving.
Now, you have been meeting all week with a lot of services company. What is the overall sentiment these companies are expressing?
The biggest surprise, and that's probably one of the biggest surprises at Intercom this year, I think a lot of people thought we were going to come in and the services were going to say, well, our rates have peaked, we're starting to see them come down, or we're maybe having to see them discount a little bit. Well, a company like RPC spoke this morning and said that they're still seeing things nearly as strong as they were 1 month ago, 3 months ago. So I think one of the bigger surprises at the conference this week is still service costs are remaining very strong, and a good indicator you're seeing of that are a lot of these longer term frac contracts, a lot of these rig contracts, things that in '08, it was very rare to have a 2 or 3 year contract with a frac company like RPC that was here today, and now it's almost become more commonplace to have these, and it's a bit more rare to have typical day rates. So again, I think the services, the question I guess is how long can that sort of strength continue, but judging by CEOs here, a lot of them are saying well through this year, and the question is going to be, is it entire 2012? In my case, I really believe it'll be at least the first half. The question is, once you get to second half 12, is the strength still continue at that point?
Neal, great insight.
Oh, thank you.
I'm Quinn Nguyen for oilandgas360.com.